Bitcoin. This digital currency, born in the depths of the internet, has taken the world by storm. It has challenged traditional notions of money, finance, and even governance. Bitcoin's journey is not just about lines of code and complex algorithms. It's a human story filled with passionate individuals, incredible highs and lows, and the potential to reshape the financial landscape. Imagine a world where you control your own money. No banks, no governments, no intermediaries. This is the promise of Bitcoin, a decentralized digital currency that operates on a technology called blockchain. A blockchain is essentially a public ledger that records every single Bitcoin transaction ever made. Bitcoin's allure lies in its decentralized nature, operating independently of any government or financial institution. The story of Bitcoin begins in the aftermath of the 2008 financial crisis. In October of that year, a person or group operating under the pseudonym Satoshi Nakamoto published a white paper titled Bitcoin, a peer-to-peer electronic cash system. This revolutionary document laid out the blueprint for a new kind of money, one that could be transferred directly between parties without the need for intermediaries like banks. Nakamoto's creation, Bitcoin, was designed to be open, transparent, and secure. On January 3, 2009, the Bitcoin network came into existence with the mining of the first block, known as the Genesis block. This marked the beginning of Bitcoin's journey from an obscure cypherpunk project to a global phenomenon. In the early days, Bitcoin was primarily the domain of tech enthusiasts and cryptography experts. However, as word of this revolutionary technology spread, more people began to take notice. Bitcoin's early years were marked by volatility. Its price, initially fractions of a cent, experienced its first significant surge in 2011, reaching parity with the US dollar. This sparked interest from investors and entrepreneurs, leading to the creation of the first Bitcoin exchanges and online businesses accepting the digital currency. As Bitcoin gained traction, its challenges became more apparent. The decentralized nature of the currency, while a strength, also presented regulatory hurdles. Governments and financial institutions grappled with how to classify and regulate this new form of money. Despite these challenges, Bitcoin's value continued to climb, reaching an all-time high of nearly $20,000 in late 2017. However, the bubble eventually burst, leading to a sharp correction that wiped out billions of dollars in value. Yet, Bitcoin endured, with developers working tirelessly to improve the scalability and security of the Bitcoin network. On May 22, 2010, a programmer named Laszlo Hanyecz made history by purchasing 2 pizzas for 10,000 Bitcoins. At the time, this amount of Bitcoin was worth approximately $41. Today, those same Bitcoins would be worth hundreds of millions of dollars, making those pizzas arguably the most expensive ever purchased. This seemingly mundane transaction marked a pivotal moment in Bitcoin's history. It demonstrated the cryptocurrency's potential as a real-world payment method, moving beyond the realm of theory and speculation. The story of the Bitcoin pizza highlights the exponential growth of Bitcoin's value in its early years. As Bitcoin gained popularity, it attracted attention from all corners of the internet, including its darker recesses. In 2011, a website called Silk Road emerged, offering a platform for the anonymous buying and selling of illicit goods, primarily drugs. Bitcoin, with its pseudonymous nature and decentralized structure, became the currency of choice for this online black market. The rise of Silk Road and other darknet marketplaces cast a long shadow over Bitcoin's early years. Law enforcement agencies around the world expressed concerns about the cryptocurrency's use in facilitating illegal activities. The Silk Road saga came to an end in 2013 when the FBI seized the website and arrested its alleged founder, Ross Ulbricht. Despite the negative publicity, Bitcoin's resilience to censorship was underscored, continuing to function and process transactions. For much of its early life, Bitcoin existed primarily in the fringes of the internet, discussed in online forums, and debated among cryptography enthusiasts. However, as its value rose and its user base expanded, Bitcoin gradually began to attract attention from mainstream financial institutions and investors. The turning point came in 2017 when the price of Bitcoin skyrocketed, reaching an all-time high of nearly $20,000. This surge in value captured the attention of Wall Street. with major investment banks and hedge funds beginning to explore the potential of this new asset class. The entry of institutional investors brought a new level of legitimacy to the cryptocurrency market. Established financial institutions began offering Bitcoin-related products and services, from custody solutions to futures trading. This institutional adoption further fueled Bitcoin's price rally, attracting a wave of new investors. The question of whether Bitcoin will eventually replace traditional currencies is a topic of much debate. Proponents argue that Bitcoin's decentralized nature, limited supply, and global accessibility make it an ideal form of money for the digital age. They envision a future where Bitcoin becomes the dominant currency for online transactions, cross-border payments, and even everyday purchases. Skeptics, however, point to Bitcoin's volatility, scalability limitations, and regulatory uncertainty as major obstacles to its widespread adoption. They argue that Bitcoin's price fluctuations make it unsuitable as a store of value and a medium of exchange. The reality is that the future of Bitcoin remains uncertain. It could eventually evolve into a widely accepted global currency, revolutionizing the way we think about and interact with money. Or it could remain a niche asset class, primarily used by tech enthusiasts and speculative investors. While the debate over Bitcoin's future as a currency continues, its underlying technology, blockchain, is already having a profound impact on various industries. Blockchain technology has the potential to revolutionize everything from supply chain management and healthcare to voting systems and digital identity. Its ability to create secure, transparent, and tamper-proof records has far-reaching implications for businesses, governments, and individuals alike. The financial services industry, in particular, is ripe for disruption by blockchain technology. Decentralized finance, or DeFi, is an emerging sector that seeks to recreate traditional financial instruments, such as lending, borrowing, and trading on the blockchain. DeFi platforms aim to provide greater access to financial services, reduce costs, and increase transparency by eliminating intermediaries. The rise of Bitcoin and blockchain technology represents a paradigm shift in the world of finance and beyond. As the world becomes increasingly digitized, the need for secure, transparent, and efficient systems for managing and transferring value will only grow.